Good morning, folks. Hope everyone out there is having a good trading week so far. Saw a lot of posts. People were a little frightful yesterday. The high beta and growth stock area, or the high beta unprofitable growth stock and crypto area, I should say, took a bit of a hit. I don't think that one day makes a new trend, but certainly that area has become somewhat crowded. The broader markets, however, don't share that same look. So anyhow, we'll talk a lot today about how I use icebergs and stops, a part of the MBO bundle. I'm going to focus on that because that's an area where I've heard a lot of interest from people. So I'm Markets Mayhem. I'm going to be presenting this Pro Trader webinar. We're going to be using Bookmap to show how their MBO bundle can be valuable for your trading. And we're going to focus on stops and icebergs because that's one of the areas of the MBO bundle where there's both a lot of value and also a fair amount of detail to go over. So let's get started real quick here. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Now, before we dive right into the webinar, I do want to let you all know that we've got a pretty solid deal going on. Cyber Mondays special, really for the next 2 days only. You get 60% off that first month. So that's solid, I think. If you've been looking to check out Bookmap, if it's been on your radar for a while and you didn't get to take advantage of the Black Friday sale, this is one that I would definitely look at. And we also have a 40% discount on some of the plans. So go to traderaid.com/bookmap. If you'd like to take advantage of these discounts, that's traderaid.com/bookmap. Also, the folks at Bookmap would love for you to come by and check out their Discord. I'm there too. They've got a great community. I'm presenting every Tuesday at 9 a.m. As you may know, they also have a myriad of other presenters there that are going over how they use Bookmap in their trading. So really for folks that are short-term traders, this is a great community to come in, check out, learn how they trade order flow, learn the different techniques and approaches, and gain a better understanding of how Bookmap can add value to your trading. A little bit about me. My trading journey began in 2005. I funded my own account and began trading stocks. Then I moved on to options, futures, commodities, and Forex as I expanded my horizons. In 2006, I started rolling my trading profits into long-term investments. I navigated through the great financial crisis, which was crazy, by the way, waking up and seeing no bid in a variety of huge stocks like Microsoft, Exxon, waking up to Dow negative 600. Back then it mattered because it was around 8,000. So that was a big down day. And then the Fed would do an emergency 50 bip cut. And then all of a sudden we were up 400 points. I mean, 1,000-point range in a matter of hours on the Dow back then, when again, it was trading around 8,000, was pretty crazy. So it gave me an appreciation for risk management. It gave me an appreciation for the big picture, for how liquidity affects the markets, for how the Fed and fiscal policy affects the markets. And I was lucky enough to get out of the way, but only because I was a very technically driven trader. And I just looked at that big S&P chart and I saw a potential double top. And I was like, I'm just going to get out of the way. If it breaks above, cool, I'll get back in. If it doesn't, then hey, maybe I'll get a better price. And turned out we saw the great financial crisis play out instead of just a small decline. But nevertheless, that's where I started to learn the value of diving deeper into the markets, really trying to improve my knowledge across a variety of different horizons in finance. So my approach then was discretionary. It's become systematic over time, and that's one of the reasons I really like to use Bookmap. My approach is driven by momentum, price action, options flows, sentiment, positioning, volume profile, and the big picture, or what people call macro. Now, I know that sounds like a lot, but when you start to build models, when you start to build automations and trading tools, you can kind of put that in the weightings that make sense for you and your system, and make it very simple to have that sort of multivariate analysis of the markets right before your very eyes. So I backtest and build my own models and systems to trade a variety of asset classes. I began working with Bookmap in early 2022. And so we've been working together for almost 3 years now, which is pretty awesome. And it's really because I saw great value in the way their platform displays market data. And in fact, one of my favorite ways to look at the market through Bookmap is through the lens of watching these stops and icebergs as they print, because the larger ones can make for at least showing where there's a lot of interest, if not turning points. I co-founded TraderAid in 2022 and Macrovisor in 2023 to share my experience, ideas on market opportunities, and education. And I also build a number of unique tools and models and provide one-on-one coaching for traders and investors. So let's dive right in. We're going to talk about the MBO bundle and specifically focusing on the stops and icebergs, why I think they're important for trading, and how I use them in my own trading to analyze order flow. But before we talk about how I use them, we need to talk a little bit about what these orders really are. I know a lot of folks out there probably understand, but this is really a situation where I don't want anyone watching to be left behind. So what's a stop, right? Sounds like a simple question, but there's actually a variety of stops out there. There's stop limits, there's stop market, there's conditional stops, but basically a stop is an order that you place where if a price gets below a level in your long or above a level in your short, you're trying to exit your trade. I recommend using market stops because limit stops don't tend to really work. You can get gapped right over, your stop doesn't fill, and then you're stuck. So market stops tend to be a better way to manage risk. I know some folks get paranoid, think their broker's watching their levels, they're going to run their stops. You know, maybe you have too much size on and your stops are too tight. Just consider that as an option, because it's not that they're out to get you as much as sometimes folks just put on too much position size, have too tight of a stop, and then those stops get bounced out. But stops are important because what you're seeing in the way that I use them are stop runs of a size that could represent a turning point. Sometimes it can be a bit of an exhaustive move. So let's talk about that. Why do stops matter? What is the value of looking at a stop order in size when you're seeing a stop run play out? Well, one example that I see during market action where it starts to become a little bit more tumultuous, where there's more realized, volatility happening during the trading day. Let's say you get a really big move down. And in that big move down, volume is increasing. You can see that in the delta bubbles, that aggression by sellers is increasing, right? And then all of a sudden you get this big blowout stop run, right? Let's say 500 to 1,000 contracts are blown out to the buy side, on a run like this, or on the sell side if people are really long and they're getting blown out. Why does that matter? Because that can be a turning point. If you're saying, I'm looking for a reversal, and you see this exhaustive looking move pushing higher, and then you see this big stop run from buy stops, or on the other side, you're looking for a reversal, you see this big downward move, and you see this big sell stop run where buyers are getting puked out of their positions, those can potentially mark turning points. And those turning points are important for us as short-term traders. If we're trading the market, in shorter intervals, then obviously looking for those really short-term turning points can help us to identify where we might be able to take advantage of a change in price action, where there may be a reversal and price action starts to move the other way. Now, if we aren't able to visualize stops and icebergs, then unfortunately, we're not going to be able to see that in the order flow. So if you're just looking at a regular candlestick chart, or even if you're looking at volume profile and deltas and things like that, you're just inferring. You don't have the order flow. So I know folks like to look at volume profile and deltas and infer where there might be icebergs or stops or otherwise, but you can't really do that. You actually need the order flow to be confident of what you're seeing. So for me, stops matter because if they're large enough with respect to the order book and where flow has been over the last 15 or 20 minutes, then they can be a turning point for the market. And that can be something that us more agile traders can take advantage of. Now let's talk about icebergs. This one involves a little bit more nuance. A lot more folks know what stops are than icebergs, so I'm going to spend a little bit more time talking about icebergs because I think it's an important area to cover, and I'm just going to really quickly answer someone in the chat as well. All right. So what is an iceberg order? On top, you can see them as they're playing out, right? These are all icebergs, and I've color-coded my icebergs so that they are red and green to discern whether it is a buy or sell iceberg. So all these icebergs overhead, these are passive sell orders. Now, let's say you're running a big trading desk. Let's say you're at Goldman or JP Morgan or Morgan Stanley, and you're running an S&P 500 futures trading desk, and you're trying to get into a very large position without necessarily moving the market too much, or you're trying to get out of a very large position without moving the market too much. First, why would you do that? Well, you don't want to move the market too much because you want to get good execution, right? If you're trying to get into a really big position, you're chasing the price higher and higher, you're not getting the price discovery you want. You're going to actually have to pay a lot more for that. And there's a little bit of, like, if you've ever played poker, there's a little bit of that going on here. You're trying to kind of hide your hand. Think about that. You don't want other market participants to know just how much size that you're going to put on. So if you're in your broker and you're placing a limit order and you don't use an iceberg, you're showing your full size, right? So let's say you're over at that trading desk at, say, JP Morgan, and you want to sell 10,000 S&P futures contracts. If you put that limit order on the books, it's going to stand out. Folks like us that use Bookmap or other folks that are using depth of market or otherwise, they're going to see that and they're going to go, whoa, what is that? That sounds like a pretty big player there is kind of drawing a line in the sand. So sometimes what you'll see is folks will say, you know what? We're not going to put in that giant size order and show it to the market. We're going to use what's called an iceberg. So let's talk about the mechanics of an iceberg, because it's actually kind of cool the way these work. It depends on who your broker is, or, you know, how you're executing your trades, how big your portfolio is, and how much size you're moving on any particular order as to whether this is going to help your own trading to use icebergs yourself. But I will say, when analyzing the market, if you're trading futures, being aware of these icebergs is really important either way. So an iceberg is essentially the ability to divide or parcel out your order in chunks. And typically it's done by an algorithm, and you kind of select how you're going to size it out and what level of sensitivity you have. The most simple type of iceberg order is one where you say, okay, like in the example, JP Morgan's trading desk needs to move 10,000 contracts of S&P. They don't want to show their size, and who can blame them, because they don't want to chase the market. They don't want the market to react to it. So let's say this example overhead is them iceberging out that big 10,000 chunk. So how would they do that? First, they put up an iceberg or a series of iceberg orders in the book. These would show up as limit sell orders, but they would be at much smaller size than what the total is that they're hoping to sell down. So if you think about it, if you were going to sell 10,000 contracts of S&P, but you could show that as, say, 1,000 or 2,000 on the book, and then every time one of those is filled, it comes right back. That's kind of the essence of what an iceberg is and what it looks like. So you're not showing your full size. You're going in there at a much smaller size. There's pros and cons to this. You kind of have to be a little bit of a student of the nuance of how this works, right? So the pro is, as we discussed, you're not showing the market your full size. Like, and you're playing poker, if you've got a really good hand, you're not going to necessarily make it clear to people, just like if you've got a really bad hand, you're not going to make it clear to people. There's some degree of bluffing here, which is constructive in the sense that you want the best execution possible. But on the other side of it, you also have to appreciate that when an iceberg is executed, let's say you get that first 1,000 contracts sold off out of an iceberg of 10,000, you've divided in 10 chunks of 1,000. Well, after that, you're kind of kicked to the back of the line, right? Because there's other orders that are ahead of you that after you execute your first iceberg, they're ahead of the line, they're a higher priority. So the advantage of an iceberg is that you get to hide your size. The disadvantage is that if things are moving really fast, you may not get all of that out, that order kind of taken care of as quickly as you want. So for folks that are really just having to flatten their book, they're typically going to use limit or worse yet, market orders. But for folks that are really looking to edge out of positions and they're less time sensitive and they're more price sensitive, they're more likely to use an iceberg order. So putting it all together, why does this matter to us as traders? Well, often is the case that you're seeing an area of the market that a larger desk is telling you is of interest to them. In this case, on the orders that we see on screen, we can reasonably infer that they're either selling down a large long position or possibly even entering a short or some combination of the two. But it gives us a really big sense that this delta here is becoming more important, and that this level overall where the passive sells are happening is becoming more important for us to watch. So if we get a big push above that, we could have some momentum. You could kind of get out of that range of passive selling. But even more important for the way that I like to trade this, if you see all of this passive selling lead to a reversal, that can be a pretty powerful indicator, especially when you combine the two. Let's say, for example, you have this type of tape where there's a lot of passive sellers, right? And then at the same time, you also have some buy stops getting triggered in size. That can be a really powerful reversal indicator. And we'll talk about that a little more. So why should we watch icebergs? Well, I really think that icebergs give us a bit of an edge because you're seeing how larger trading desks that really can have a larger impact on the market are trying to execute. What levels are important to them? What kind of size they're pushing around? Often is the case when you start to see those really large multi-thousand contract iceberg orders and you see that sub chart we'll get into in just a moment, where the iceberg orders are ticking up and ticking up and ticking up. That can give you a sense that there's a lot of accumulation happening by passive desks, that they're starting to get more constructive on price action, either telling you they don't want to be in shorts there, or they're going long, or some combination of the two. That's a signal when the big desks, when the so-called smart money are expressing those opinions in size. We need to pay attention as smaller traders. Now, just like what I was talking about with stops, you can't really infer accurately an iceberg by looking at your volume profile, by looking at deltas or otherwise. I know folks try, and you might be able to do it maybe half the time, but the real key is looking at the flow. This is one reason that I really like the way the MBO package allows us to see that flow, because let's be real here. If we're just doing sort of guesswork, looking at volume profile and trying to infer what might have happened, we're wasting mental capital. Why not just be able to print it on screen, know for sure what's going on, and be able to act on accurate intelligence rather than just sort of inference, right? Naive inference that can get us into a little bit of trouble. So let's talk about the value of adding stops and icebergs to order flow analysis. For me, it's finding turning points and actionable levels. It's really all about getting a better understanding as to how the mechanics underneath the surface of the market are working and how that may impact price discovery. For example, if you're in a strong upward trend day and everything looks rosy and the price just keeps stair-stepping higher and higher, and then all of a sudden you start to see thousands of iceberg sales layered on overhead, that can be a clue that maybe it's time to close out that core position and just leave runners on if you want to have anything on. Because often is the case, if there's that level of institutional selling, it's going to deter buying, not only from the algos that might be bidding the market, but from other trading desks that can also see this data and are like, I wonder what they see that we're not seeing. Maybe we should pause that buy program for a minute. So, trading is not just a game of preserving and growing capital. It's also a game of preserving our mental capital and our time. We don't need to just stare at the screen all day, kind of, burning out our mental capital and our time. When we see things like this, we can take action, and maybe that series of big iceberg orders that are selling out a trend day is a sign to take some profits and go do something else for a while. Wouldn't it be nice to have that signal right in front of us? That's one of the reasons I like it, because it's an optimizer of time. For me, I've been trading for about 20 years. As we get into 2025, it'll be 20 years of trading for me. And one thing that I can say emphatically is that one of the most important things to have staying power as a trader is not burning out. So I always want to optimize for ways that I can improve my ability to gather data quickly and efficiently. So let's talk about this, and you all are welcome to screenshot this, and I'll share the slide deck so that folks can download it later if they're interested. But this is how I set up my stops in Bookmap. So we're going to go over this bit by bit so we can have just a little bit of a better sense as to how you can replicate this on your end. Now, first thing is you have to have Rhythmic or Bookmap data to have the MBO bundle. It isn't going to work on DXFeed. It may not work on other data providers. You'd want to contact the Bookmap folks to make sure you have the right package. But once you have that set up and you have the MBO bundle as a part of your Bookmap subscription, you will have the ability to visualize stops and icebergs. So the way that I do it is a little bit different than the default configuration out of the box. And there's a reason for that. Again, going back to efficiency and really trying to optimize for time, I don't want to stare at my screen all day. It's really, I'm doing a lot during the day that's not just trading. I'm coding, I'm researching, I'm keeping up with all that's going on, I'm looking for the next opportunity in the market. So I like to make things super duper efficient. That means that when I'm displaying a stop on the screen, it's one that is of large enough size that it should get my attention. So you can see here, I have this set up for a standard deviation interval of 30 minutes with a multiplier of 10. So that means that I'm looking at 30 minutes worth of order flow, and I'm only looking for the most extreme examples so that we can have those marked on the chart. And then I'm only looking for those extreme examples that are stop runs where there's multiple price levels being moved through. Now, why does that help me? Because it filters out a lot of noise. I don't want to see a lot of stops on the chart unless there are a lot of large stops going on that should get my attention. Adding to this, Bookmap has a really cool feature. You can actually have it do a voice announcement when something like this occurs. When there's an alert posting, you can customize a voice announcement saying something like large stop in S&P futures by sellers at X level, right? With this many contracts. That can tell you, hey, it's time to look over at your screen and decide, is this a moment where I'm going to take some kind of action? Am I going to put on a trade? Am I going to take off my trade? Am I going to adjust how I'm interacting with the market, right? So having all of that means you can optimize your time and your mental capital, which is, again, just as important as your actual capital. You don't want to burn out. You don't want to get lazy or tired. You don't want to be distracted. And if we just stare at the same thing all the time, I can guarantee you're going to miss details over time. Our brains are kind of adjusting themselves to ignore things they consider noise. So take the noise out, optimize for signal. That's my thesis behind how I have this set up. I also, as you can see over here, I color code the stops, just like I do with the icebergs. Everything is color coded because I want to be able to glance at my screen and know, is this a buy stop or is this a sell stop? Just very quickly at a glance. I also make the icons just a little bit bigger. And I do a little bit of price aggregation as well. So I'm keeping this on screen for anyone that wants to screenshot it. Again, presentation is being recorded. I believe it'll be posted later. I'll share my slide deck as well so you all can gain value from that, because the whole goal of this webinar is to help everyone out there get a better sense as to the value of this. So I do want to make sure you can go back and check it out at your leisure, at your convenience as well. Now, we're going to just rehash this. Why do I focus on larger stop runs? There are more likely to be turning points. It helps to clear up potential distractions. If your screen is littered with every single stop that's happening, you may not gain the same value. It may start to just be something your brain tunes out. And that gives me a quick glance assessment of the flow. I can simply glance at my screen and see, are there a lot of stops happening? And of course, with the voice over announcements, you can also have the capacity to be able to have that just, coming out of your headphones, your speakers, or whatever you're using when there's one of these larger orders. That way, you don't necessarily have to be staring at the screen the whole time. You'll know when something larger that meets your criteria is occurring. And your criteria may differ from mine. You might have a different way of looking at this or trading it, but I'm offering how I look at it as a suggestion, just so that you can optimize for that larger order flow. Now let's talk a little bit about how I set up my icebergs. So first, it's a similar setup as the stops, right? We're looking for really larger moves, ones that can potentially be turning points in the market, which means I've got to tune out all the smaller stuff, because to me, it's just more of a distraction. Some folks may gain value from it. I've got nothing against that at all. I'm just sharing how I do things, because I really think that it behooves us to try to focus on the bigger order flow, the stuff that may be a turning point, or at least may be larger trading desks giving us ideas as to where they're concerned with price, where they find that they want to either get out or get in, or, kind of turn over their positions. Because more often than not, especially when there's a confluence of stops and icebergs moving in opposite directions, that can be valuable. Those can be turning points. So again, 30-minute standard deviation interval with a 10 standard deviation multiplier. So I'm looking at 30 minutes of order flow, and I'm looking for any of those 10 standard deviation events, which suggests that that is a large enough iceberg that it qualifies my attention. And I am getting rid of cancellation icons. I don't necessarily want to see the canceled orders. I only want to see the ones that have been executed. I'm showing the total volume and the icebergs number, because that helps me get a better sense of size. And then I am color coding. Just like with stops, I think it's really important to color code, because again, at a glance, you can tell, is this a sell or is this a buy? So if you get one of those voice announcements, which the icebergs can do as well, there is a function where you can customize that. You'll know when you look at the chart exactly what's going on. You'll know based on the voice announcement and the coloring, is this a series of sells? Is this a series of buys? And then you can start to parse out what that might mean if you have a position, or if you've been looking to put a position on. So the core crux of what I'm doing is really looking for unusual size based on that last 30 minutes of flow. 30 minutes to me is a large enough window to analyze. You may find that it helps you to use a shorter window. Some folks are using 10, 15, 20 minutes for these as well, and that's fine. Whatever you feel is more actionable. I've done pretty well looking at 30 minutes as a standard deviation interval. So why do I prioritize those larger icebergs? Because I want to focus on the larger passive trades. Those can be turning points in price action, right? I've seen this happen more than, really any other type of order type than maybe just stops. Like stops and icebergs in large enough size can be turning points. And so, if we're trading S&P 500 futures as a day trader, we're always trying to get a little bit of an edge. We're trying to get a sense as to, where should we enter? Where should we exit? Where should we manage risk? And knowing this type of order flow can at least help with knowing about entry, knowing about where we may want to exit based on that flow. And of course, it helps with risk management as well. If you're starting to see a lot of icebergs disagreeing with you, if you're long and they're passive selling the heck out of it, you might start to say, you know what? This isn't really working out. There's a lot of desks that are moving against me here. Maybe I'll go the other way. Maybe I'll flatten out and look for an opportunity to go the other way on this. So that's the overall view. I'd like to pause for questions and answers, and then we're going to go right into Bookmap as the market opens, and maybe we can get some interesting order flow that we can live analyze as we go. So folks, if you have questions for me, feel free to put them in the chat. on YouTube, on X, anywhere you're watching, and we'll go from there. And then we'll dive right into Bookmap Live. So one question we had in the chat room was, will this video be reposted on the Discord later? I believe it will. I believe it'll be posted on the Bookmap YouTube as well. So folks, not so many questions. Maybe I did a good job explaining things, or maybe I put our awesome audience to sleep. I don't know. I'm assuming it's the explaining part. We're going to go into Bookmap here and we'll revisit Q&A in just a bit. Market's opening here. So I want to talk about this icebergs and stops on a live chart, because I feel like, you know, a lot of us best learn by watching this stuff happen in front of us. So maybe over the next 30 minutes, we can talk a little bit more about order flow. See if we can have some of these play out. So just like you can see on screen, here's 137 passive sale iceberg orders going through. And you can see just a little bit of a divergence here between the icebergs and stops from the open, a bit of accumulation by passive orders, and some of the smaller traders getting stopped out. Not quite enough to say that we're getting a divergence that's actionable, but certainly worth watching. And that's the other thing that we can discuss just a little bit while we have it on screen. So we talked more about on-screen stops and icebergs that are on the main chart, but there's also the subchart here, and you have these ongoing graphs that give you a sense as to where that flow has been over the time frame that you're watching it. And you can customize these depending on what works best for you. You also have the radials here that'll give you a cumulative total, net total, as to where these are. So when you see really large numbers, that can be a sign. For example, if you saw a really large negative number on icebergs and positive number on stops, that could be a sense of, you know, you've got the smaller traders, the more momentum sensitive traders, you know, getting stopped out, and then icebergs going the other direction. So that could be a move where shorts are getting squeezed out and then icebergs are selling into that move and taking advantage of it. That's the kind of turning point that I would be looking for example, on a trend day higher to say maybe we start to reverse. And the reason for that is if a lot of smaller folks are getting stopped out and it's, you know, a large amount of stops, and then you see the passive desk saying, okay, that's enough for us, we're going to start to sell into that. That's kind of the best of both worlds. You get a sense of some degree of exhaustion on the stop side, while simultaneously you get a sense that there's a reasonable amount of interest on the sell side, that passive desks are sort of fading that move. A little bit more passive selling here, one open order overhead, and then 30 contracts executed in that. We just had a little bit of passive buying, but that order just got pulled. You can see them kind of coming in, blipping in and out. The first 10, 15, 20 minutes of trading can be pretty volatile. You've got the overhang from yesterday's order flow and then a lot of new institutional order flow transacting. So really that first and last 10, 15, 20, 30 minutes, depending on the day, tend to be pretty darn volatile. Today, it looks like there's some overhang of selling and some new selling happening as well as we start the day. We've got 150 passive buys happening here. You can start to see here the subchart on icebergs is pushing higher here. And you can also see it in the radial, a cumulative total of 312 contracts. So Low-Key asks, does Bookmap also work on currencies? It works on Forex futures, which are generally liquid enough that they're valuable to watch the order flow on. So you've got the euro, the yen, the pound. You've got pretty much all those futures that you can watch over at CME. You just got to have the right data package for it. But yes, you know, in that sense, it does work on currencies through those futures derivatives contracts. And Ships at the Strait of Gibraltar says, you always do a good job explaining. I like your classes a lot. Thank you so much. And then Loki says, your trading experience is the same as my age. Well, I feel old now, so that's good. And we are seeing more passive buyers coming in here. It's kind of interesting. They're helping to support price where it is. There's certainly sellers dominating the tape overall. You can see that with the red delta bubbles. That's telling you that sellers are showing more aggression up until just now. And leading up to price starting to perk up, you had two reasonably chunky iceberg buy orders under price, right? So as soon as price started to dip, you saw those passive buyers start to come in. So we'll see if this is something more meaningful, but it is noteworthy. We're starting to push up to that point of control and over it now that it's been pulled lower, and we're getting closer to VWAP. So for me to think of this as actionable, I'd like to see more passive buying coming in, and I'd also like to, of course, see that 20-minute opening range pushed up through the top side, right, with some acceptance built overhead. So right now, the top of that range is about 60.72, and we've got maybe about an 11 handle opening range here. And we see more passive buy orders coming through. And these are still open orders, the diamonds that don't have numbers associated with them. So you can see some of that transacting here, 346 contracts just then. So it is interesting. There is an appetite for S&P futures here as we start to drift a little bit lower. So you can't really spoof these. You can spoof a limit order, but you know, the idea of spoofing is that you're going to put an order in and then you're going to have it disappear from the books before it's executed. But what's happening here is we're seeing orders that are executed. So, you know, I guess you could say, well, people can put in an iceberg and not fully execute it. So you'll see some of these orders sort of blip in and out, but that's not really a spoof. That's just a partially executed order or a canceled order. But I'd say that icebergs have more value than just looking at the limit orders because you're actually seeing flow. You're actually seeing folks executing. So these numbers are contracts that have actually transacted, right? Versus what we might see in the current order book, where these are just limit orders that are set by either side. Above, you've got your offers, below, you've got your bids. In that, you certainly do see spoofing. But in the icebergs, it's really not as possible because these are orders that have already gone over the tape. Let me know if that helps. You're welcome. Continue to see that appetite here. There's more accumulation. 424 icebergs that have transacted, and we're talking about total flow, so that's a net number. You also have some smaller stops. You know, you got negative 200 here. So it's not as big of a divergence as I was talking about, where you're seeing really iceberg get very aggressive on the buy side, stops getting stopped out, but you're starting to see a little bit of that, a little bit of a divergence, which is interesting. Oh, Loki, I'm just messing with you. I appreciate it. I really do. He goes on to say, no, believe me, it's a compliment, because he said my experience is the same as his age. He says, now we can learn from a real expert. So thank you. That's very kind of you to say. We do see a reasonably large sell delta here too on the session range volume profile. The reason that's important is if we do start to push higher above that, that also gives you a sense that if these orders were, let's say, sold to open shorts, those folks are getting further and further offsides, and they'd be more likely to want to cover. They'd be more likely to be motivated buyers in that scenario. And I'll also make one other observation that is somewhat related, in the sense that we're pretty close to some pretty big levels in S&P options. And as a result of that, it is likely that we get kind of pinned around the current level, around 60.50. So just something to think about as a bit of nuance here, just that the role those options magnets can play. And we are seeing some more of those passive buy orders. You can see those are most prevalent on the tape. There's really not any passive selling happening here of any discernible size. It's mostly the passive buyers that are showing interest based on the parameters that I'm using. You also see just a little bit more buy-side aggression in the delta bubbles as well. And we can switch views here. Another thing that's really cool that you all can get is Trader Map Pro. Okay, and this allows you to clean up the order book so that instead of having this band of liquidity that follows price around, you can actually have something that cleans all of that up. So this is also, as I understand it, part of that MBO bundle. And I want to talk about it really quickly because some folks have said, well, I don't really see a ton of value anymore because they've changed how they do their market making. You've got these like really annoying brackets around price. And by the way, we can see those passive buys continuing. We can see buyers becoming a little bit more aggressive here, and we're testing VWAP from below. So far, those passive buys are proving to be a little bit more actionable. Buyers are starting to take control of the tape. So that's my little note from how this can add value. So far, so good, right? It's helped to mark the lows. It's still not yet actionable for me based on a trend day analysis. I still want to see us push above the opening range. But for you super nimble scalpers, this is exactly the sort of lows you'd want to be looking for to act on. Now, let's talk about this Trader Map Pro for a second, because it is nice to get rid of all that unnecessary sort of liquidity band around price that the algos create. It's become a bit of a distraction. It's been a thing now for 5 months. Really, since July. So how do you set that up? Let's just quickly go over that because you can use TradeMap Lite too if you want. TradeMap Lite is free. You can add that in and it's very easy. It just filters ES, MES, NQ, and MNQ. If you have the MBO bundle, however, you're afforded the ability to use TraderMap Pro, and that allows you to filter out bots with this bot remover option. And I put the sensitivity pretty high for NASDAQ and S&P because I found it to be necessary to do so, to really get rid of those bands, but also not to filter out too much. So that's how I set that up. That's what it looks like on the screen. And it gives you just a better sense of where liquidity really is versus just that annoying market maker bracket algo. Now let's go back to this view, because we've been kind of spending some time there on the presentation, and I want to go back to it to circle back to what we've been talking about. The key was looking for passive buyers sort of overwhelming those passive sellers or just sellers in general. We got that. We also got a little bit of a downside stop run, and we had passive buying into it. It wasn't the level of divergence that I typically like to look for a powerful reversal, which is why this is more of a slow and steady grind. But you can see that sellers back here were being absorbed. Buyers were coming in, and when they were trying to sell the market lower, they were just leveling in those iceberg orders anywhere that they saw price moving lower. And apparently that trading desk that was putting these through was interested in price just until it started to push above the point of control. And then you can start to see we don't have as much interest in passive buying, but we have buyers actively taking control of the tape. I'd consider that a reversal, and the early signs of it were the icebergs. So that's exactly how you can use this to really improve your understanding of order flow and how it can move the markets based on these order types. So let's see now if we can take out the top of that opening range decisively. We're coming up on forming that 20-minute opening range. There's about 3 minutes to go. So pretty much there, right? So I'd love to see just a big push above that and key 2, which is that options level that we're layering in from my SPX options visualizer. So far, seeing just a bit of consolidation, and now we're seeing maybe a retest of VWAP from here. Yep, just a bit of a retest there. The ideal setup would be that we hold VWAP, bounce from it, and push above the opening range, but we'll see what the market gives us. That would be a sort of higher low continuation of upward momentum, which is the sort of micro trend you really want to see if you're looking for A, a trend day, and B, for momentum to be on your side. So a couple other questions coming through that I'll get to as we watch the market to see how it resolves. We just push below VWAP. So now it's really going to be interesting to see whether those passive buyers start to come right back in. There are still some open orders here. So what does the hot call 128K mean? Is that potential support? So the hot call that you saw was yesterday's flow. I have that on the screen until today's flow comes through. And what that means is that you had a lot of options transacting there yesterday, right? And so that's a level you could potentially look at for support based on yesterday's interest, but I'm more interested in the levels that are actual positioning, right? So, we would have to go a little bit lower than that to look at options implied support, maybe down to gamma 2 or this vol trigger right around S&P 6000. S&P 6000 to me is a really, really big level. It's quite important to watch. If we move below that on a closing basis, I think things could get kind of nasty, but not necessarily looking for that today per se. We do see some passive buyers coming back in just around the same level. We'll see if they're able to put us into a slightly higher low here. Yeah, so Derek, that's part of the SPX options visualizer. It's looking at about 10,000 options on the chain, updating minutely throughout the trading day. It's an add-on I've developed. If you want to learn more about it, you can learn more about it here at traderaid.com/SPX. And then Loki says, what are your thoughts on NVIDIA's antitrust stuff from China? One of my key risks for NVIDIA that I identified for 2025, even going back to the summer of this year, I started talking about it, was regulatory risk. I don't think the company is a giant Ponzi scheme. I don't think it's the next Enron. I think a lot of that stuff that people have said is nonsense. It's just really a misunderstanding of financial accounting. But if you look at the real risks this company faces, one of them is regulation. And so you see the EU and China investigating NVIDIA. And I think that if it turns into something bigger, particularly if it impacts their CUDA ecology and forces them to allow other players into it, that could be a big deal, right? Because they have 95% data center market share in GPUs. And they used to have 80% margins. It's going to be dropping to the low 70s soon, but still those large margins are generally supported by the fact that they have a monopoly. So if they are engaging in anti-competitive behavior that authorities can quantify, and I believe they likely are, that's a bit of a risk. That doesn't mean the stock's going to crash. It doesn't mean that it's game over. It just means that it could create a more meaningful correction, and it could create a better competitive environment for other players in the space. I mean, everyone wants technology to be innovative, and innovation happens when it's readily available for other players to compete, right? Where AMD and Broadcom and Qualcomm and others can also put their chips out there, and everyone gets kind of a fair ability to compete in that environment. Right now, we don't have that. Right now, it's really just governed by NVIDIA because of their CUDA ecology. And we could talk about that more later, but I would say it is a risk to qualify, and it's something that's more of a 2025 risk as to how regulatory scrutiny may impact NVIDIA. On the icebergs, what does it mean when it shows one number and then another in paren? It means that you've got this many contracts executed, and then this is how many orders that iceberg had within it for that many contracts to be executed. So the first number is the volume. The second number is the number of orders. Hopefully that helps to clear that up. I've got just about 5 minutes left here, folks. We are on the lower end of the trading range. We do still see some of those passive buyers coming through, but the active buyers sort of gave up the ghost as we got to the top of the trading range. We have formed our 20-minute opening range as well. It's just about 11 handles, which suggests it's probably not going to be a very exciting trading day. Just back testing opening ranges, the larger they are, the more dynamic price action tends to be, and this is a pretty narrow range. So just something to take into consideration, particularly given the fact that we are sort of glued to 60.50. It's a very large level of options positioning in the S&P 500, and I'd be remiss not to mention just how important options positioning can be for price discovery in S&P 500 futures. Now, if you do find Bookmap as useful as I do, and you haven't yet picked up a copy and you're looking for a good deal, they do have some going on right now. You can visit TraderAid.com/bookmap, scroll down to the specials. Also, look for my posts on Twitter. I've got a coupon code if you're looking for the monthly subscription. And for folks interested in learning more about what I do at TraderAid, you can take a 7-day free trial on our Discord. Visit TraderAid.com/Discord, learn more, check out the video, gives you a good sense as to what we offer on the Discord. And then if you want to take that 7-day trial, you're welcome to do so. Right now, S&P 500 futures just testing that point of control. We can see we're just somewhat above that sell delta we talked about earlier. That's one reason we had that, I think, that push by the active buyers before. Some of that was probably short covering, but nevertheless, we're getting just right down to that level and just sort of building some acceptance around, if not a bit above, the point of control. This would be a great opportunity for buyers to try to take another stab at making a run higher. You are welcome, Loki. And folks, if you have questions about this presentation afterwards, feel free to reach out. You can always email me, mayhem@traderaid.com. Let me know what your thoughts are, your feedback, your questions. Every time I do a webinar like this, my goal is to help you all learn something new, hopefully be able to improve your trading. But I realize there's a lot of ground being covered, and you might watch this a second time, or maybe you're just watching the recorded version of this right now, and you might have some questions come to mind. So feel free to reach out. You are welcome, Ships. Thank you for watching. Thank you, everyone, for watching. It's always a lot of fun to do these. And remember, I'm doing them every week. Tuesday at 9 a.m. is when I'm going to be covering Bookmap and how I use it to analyze order flow. Also, Thursdays, 9:30, tune in, Morning Bell Mayhem. Doesn't mean anything's crazy happening in the market. It's just me, Mayhem, at the Morning Bell, right? But it's a fun name. And tonight at 5 p.m. Eastern, I will be presenting Navigating the Markets live. So be sure to tune in. It'll be on my YouTube and my Twitter. Be covering a lot of ground. Should be a really fun presentation. So we do see a bit of a bounce off the point of control. Buyers are trying once again to push this thing. Now we're starting to build above VWAP. Again, I don't expect this to be a particularly dynamic trading day unless we can really make a move away from that 60.50 level. So the higher we're able to push, particularly above that opening range and build some acceptance, the more likely it is we get some more dynamic price action. But it's up to the market. We've got to trade the market in front of us. So right now you see buyers getting a little more aggressive, those green bubbles getting a little bit bigger as they're taking control of the tape and making another run for the top of the range. So folks, it's 10 a.m. I'm going to cap it here. Really appreciate you all tuning in. I'm sure the Bookmap folks will be taking this presentation and sharing it on their YouTube and Discord so you can watch it again later. And again, if you have any questions for me, feel free to reach out, mayhem@traderaid.com. If you want to check out Bookmap at a great price, visit traderaid.com/bookmap. Scroll down to the specials. You can get up to 40% off. That's 40. And if you want to take a free trial with TraderAid, visit traderaid.com/discord. Learn more about what we do. Thank you, everyone, for tuning in. I'll see you tonight at 5 p.m. for Navigating the Markets, and I'll see you here next week, Tuesday at 9:30, or 9 a.m. actually. See you then.